Hi, thanks so much for tuning in to Beekeep Prime. This is an earnings conversation. We're in conversation with the management of Bharat Forge. Amit Kalyani, the Deputy Managing Director of the company, is joining in. Amit, thanks so much for taking the time. Uh, Seemingly, on a consolidated basis, when I look at the top line, there is considerable growth, but there is also quite an increase in the costs, and that seems to have dented the bottom line a little bit. Could you break down the numbers for us and help us understand why there was such an increase in cost? And I see, in particular, on the standalone side, there is a substantial increase in the financing costs.
Yeah, so the interest cost has two components to it that have gone up. One is we have a mark to market of about a one time of about 35 crores. The second is, the working capital borrowings, which are self-liquidating, have an increase in interest cost of about 400 to 450 basis points because of SOFR and, the Euribor going up. So that's a natural impact of the overall, financing cost going up. And the MTM of 35 crores is notional. And that is this quarter. It probably will not be the next quarter. So on a normalized basis, I would say that a 50 to 55 crore per quarter is the kind of interest cost that one should expect.
Okay. What about the rest of it then? There is, as I mentioned, seemingly an uptick in your international business. I look at specifically the US. Would you say that has turned the corner, and what is the outlook on the rest of the international business?
So look, basically, if you look at our overseas business, I would break them up into two parts. One is our steel forging business, which has three plants. One is in Germany, one is in Sweden, one is in the US. Those are chugging along, they're doing okay. The aluminum plants, we are under, the ramp up of new capacities. So our total aluminum capacity is about 7.5 million pieces. And out of that, the old plant was 3.5 million. And the two new plants are 2 plus 2, so 4 million. And out of 7.5 million, we're currently running at about 3.55 because those two plants are being ramped up. One is ramp up. Second is we have to get cost compensation and price increases for all the inflationary impacts in the global markets, especially energy, raw materials, and manpower. And once these go through, once these are done, then this will be back on track. And we are confident and guiding for these all being EPS accretive in 2024.
Okay, so we're expecting it to be a problematic phase even in Q4. One would assume that
yes,
there will be a loss.
I mean, it'll be an improvement over Q3, but it's not a 0 and 1 game, so there will be an improvement. But there will also be some other new businesses that will start firing in Q4, and I think next year is going to be really an inflection point for Bharat Forge because a lot of the businesses that we have incubated for a long time will really turn the corner and start providing us top line and bottom line.
Could you give us some of the updates there? Because the last time you spoke to us, you spoke, Amit, about the industrials verticals. You spoke about basically the casting business, as I said. I looked at it. And you spoke about JS Auto as well, where there is huge potential. Could you give us an update about how these businesses specifically are doing? And
I'm very happy to talk about this. JS Auto has seen a 20% growth in top line quarter on quarter. It's seen a bottom line EBITDA growth of 50%. And this year, JS Auto's numbers will be pretty similar to last year, in spite of a 30% drop in one of its key market segments, which was wind energy. We have made that up with some new customer wins. JS Auto has won over 150 crores of new business this quarter. This is annualized business, which will start from next year. And we expect that next year we should see a close to, I would say, 30 to 40% growth over this year in JS Auto, with a growth in margins as well. So we are very bullish about that. And we expect that this whole casting business over the next 3 years will become, 2 to 3, maybe more than 3x of where it is today.
What about the industrial forgings?
So industrial forgings, we are not adding any capacities. We have the two manufacturing facilities in Pune and one in Baroda. We have adequate capacity to grow, And that is currently running at about 1,000 crores, and that will go to about 1,500 crores in the next 2 to 3 years with significant value addition. Now, the other area where we expect to see a lot of growth next year is our defense business, where we currently have an order book of 2,000 crores, including 600 crores that we won just in Q3. And these are all export orders. These comprise both artillery guns, mounted gun systems, vehicles, and spares, and all going to non-conflict areas. And we expect that this business is going to be a continuing business. And further, we will see a ramp up of this very soon once the Indian orders start flowing in.
I'm actually curious. You're saying that FY24, Amit, is going to be an inflection point for Bharat Forge. I'm curious about the revenue contribution and mix with all of these businesses coming on stream, right? The aluminum business, you talk about defense having a larger contribution, casting having a larger contribution. What is auto, non-auto going to be, and what's the mix going to be then?
So even in the casting business, there is part of it which is auto. Sure. There is part of it which is non-auto, although there the auto share is probably 20 to 25%, whereas non-auto is 75%. Defense is obviously all non-automotive, is industrial and defense. So if you leave defense apart, I think we will see a slight shift towards more industrial, but our PV side is going to grow also next year. And we see some new order wins on the commercial vehicle side. We've announced some new order wins on the automotive side as well of about 265 odd crores. And for the 9 months, we've seen order wins of close to 1,500 crores. So, we are seeing significant growth coming from these areas. And we have a lot of new, products and segments which will start towards the end of next year also. So I think there will be a slight shift towards industrial, but it's not going to be very drastic. I'm saying that by putting defense aside. Well, that's a completely different vertical.
Right. And you essentially expecting that 1,000 crore is a possibility on an ongoing basis as a quarterly revenue. Is that right?
From what?
From defense.
I'm not talking about 1,000 crores as a quarterly revenue yet. Right now, we have a 2,000 crore order book.
Sure.
Okay. Which is to be executed over 2 to 2.5 years. Obviously, we will continue to get more business. And part of this business is a recurring business. Part of it is a, capital purchase. So the recurring part we expect to convert into an ongoing business, which should be, somewhere in the order of 500-600 crores a year. And then you'll have capital business, which could be, whatever it is. And then that will break down into an annualized business. Plus, we are trying to grow our specialty vehicles and armored vehicle business. So all this put together in the next 2 to 3 years will create, a sizable business for us in defense.
Let's focus on this quarter, I think, because a lot of your investors will be looking at that profit number and the margin number, and they might have some questions. So is this a temporary blip when you're talking about the pressure on margins? Or do you see that easing out once things settle in the international business as well? And FY24 onwards, we see a substantial uptick from where it is right now?
So the way I would explain it is that the minuses will become first neutral and then positive. And then those areas which are really not yet of size, such as the defense business and the casting and the industrial business, will dramatically scale up. Our casting business, our entire industrial business last year was about 1,300 crores. Okay, in 2-3 years, it should be more than double that.
Okay.
And industrial defense business was like 400 crores last year. I mean, it's definitely going to be significantly larger than that next year, and significantly more, let's say, value accretive. So I think it's going to see a pretty big swing next
year. Now, specifically on international, and this is my last question.
Yeah.
We asked you about the outlook and whether or not you could put a pen down and say that you've drawn the line. You can't say that at this point, or can you say that perhaps?
So I would say that we are at the bottom and we will start going up.
And this is even in Europe, which
Oh, yeah,
looks a little
absolutely.
bleak.
Absolutely.
What are the reasons that are giving you that confidence?
Because we have capacity ramp ups in place.
Hmm.
We have let's say cost compensation and repricing of products because of inflation. So all that is going to happen in the next 2 to 3 months, and that will improve the situation quite dramatically.
Amit, thank you so much for taking
But
the time.
as I said, let's focus on the annual number, and on an annualized basis in 24, I'm very confident that our subsidiaries will be EPS accretive, both international, India, all of it put together, and on its own as well.
Yeah, starting. I think that's my biggest takeaway. Starting Q1 FY24.
I think the harvesting phase has come for a lot of things that we have incubated for a long time. Okay,
fair enough.
And some positive surprises should come everybody's way.
Okay, looking forward to that, and looking
you.
forward to talking to you at that time.
Likewise.
Thanks a lot, Amit.
Take care. Thank you.
Bye.